According to World Trade Organization, distribution and financial services are the services most traded globally, each accounting for almost 1/5 of trade in services. In 2019, International Islamic Trade Finance Corporation approved $5.8 billion trade financing, a 12% increase in 2018 in order to advance trade in member countries. Welcome to another episode of Islamic Finance Weekly, where we discuss the importance of non-interest market to an economy. Joining me on the show today is the President and CEO of Shape Knowledge Financial Services in Kuwait City, Mr. Abdulkader Thomas. Good afternoon from Nigeria here, Mr. Thomas, and thank you so much for the opportunity to engage you on the topic, Islamic Trade Finance, Challenges and Opportunities in Nigeria and Africa.
Assalamu alaikum and good afternoon to all of our dear friends in Nigeria.
Thank you so much, sir. So, Mr. Thomas, let us begin by understanding the concept of Islamic trade finance and its importance to the global economic trade value chain.
So I think we'd like to start out with two very straightforward concepts that are distinct. The first one is that when we talk about Islamic trade finance, we're actually talking about a different form of intermediation. And the type of intermediation we'll see is that the Islamic bank, it could be the new bank Taj, it could be Jaiz or Sterling. They're going to actually step into the chain of buying and owning the goods prior to moving them on to the next player. That means that the international Islamic trade finance parties are often taking risk in goods as well as the credit risk of the off-taker. So it's a bit of a different concept than what we see with traditional banks, which will tell you that they only deal in documents. So that's the first element. Now, when it comes to global trade, the reality is that Islamic trade finance is still actually very, very modest. It's a drop in the bucket compared to the global volumes of trade, even in South-South trade between African countries, Africa and Southeast Asia, etc. Still, Islamic trade finance is not yet a well-developed or deep service.
What can you say is the importance of Islamic trade finance to Nigeria and Africa?
So I think there's a couple of interesting situations which are evolving. And one of those is just in Nigeria itself. We worked earlier this year, myself and some friends, on a pro bono basis for a UK investor. And the UK investor had a very interesting business proposition. He said, I think they grow good cocoa in Nigeria. Why don't we get it in Europe? So then he examined the value chain. And as he examined the value chain, he discovered that there were difficulties getting payments to the farmers on time. There were difficulties transporting the cocoa to secure warehouses. There were there was actually sometimes no sorting of the cocoa prior to shipping outside of Nigeria. And frequently the international importers for high value products in the agricultural sector, they want pre-sortment. They don't want to do that work. So what he did is he connected with one of the Nigerian banks, and that bank provided him with a Musharaka facility. So they participated with him to buy the cocoa from the farmers, bring it into a secure warehouse, and the sorting was done in Nigeria. In that particular transaction, there was some really excellent news, which was that the high-grade cocoa out of the sorting was shipped to Switzerland, where one of the top global analysts and distributors of chocolate products actually found it to be equal in grade to competing cocoa from Ghana or Ivory Coast. So the moral in this story is really two parts. The first one is that there are a lot of high quality but undiscovered gems within the Nigerian economy. And there's also a shortage of investors into that. In this case, the international player was the off-taker. The British investor was the off-taker for the cocoa and was able to do a dollar to Naira transaction. So his off-take was dollars. His partnership with the Nigerian bank was Naira for domestic funding. And then the Nigerian bank shared, because it was a Musharaka transaction, in the dollar proceeds to link both to extinguish the transaction repay what was due to the bank. So it was a very innovative solution. And the reality is that without a Nigerian bank offering a alternative thought process, a different way of doing business, that UK investor was not coming. He'll just go and buy cocoa through the established channels. So I think for countries like Nigeria that have not maximized and achieved their full opportunity in trading goods and services, agricultural goods where they have a competitive advantage potentially, Islamic finance is a way to open the door and bring things out forward. Now, I promised you a second thought, which is, if you brought up earlier the International Islamic Trade Finance Corporation. ITFC does two things. They bring in support for countries that are sub-investment grade, where the domestic banks cannot issue a letter of credit that's susceptible to international banks. They bring in support at a fair price to local countries. In this case, we're talking about Africa, but the situation where, whether it's Nigeria or Mali or any of the other lower income countries in the region, that they can get their credit at a fair price, not at an extortionate price. They can buy important things that they need. They might need fuel, they might need equipment, they might need consumer goods. And it also provides credit for them to pre-export credit for them to move things out. And that's part of its mission. It views itself as being a OIC-driven company, and it has a duty to member states to improve the quality of life. And if you go through their web pages, you'll see some fabulous reports on how they've supported sustainability. But the second thing which they do is, every dollar that ITFC puts into a transaction, they bring $5 from somewhere else. And the $5 don't come from expected sources. So we had my company, we provide some advice from time to time to ITFC. And with ITFC, we had a partner event in December of last year. And it was really fabulous. You had institutional investors from the United States and Europe showing up, and institutional investors from Asia showing up and saying, we invest alongside ITFC because A, we get a good return, but B, it's part of our mandate for ESG. We feel that we're supporting sustainable development in the places where ITFC is actually financing trade.
So thank you for your thoughts on the concept of Islamic trade finance, which deepen the knowledge of our viewers and the importance of ITFC. I remember clearly that last year, ITFC disbursed $5 billion towards improving the livelihood of millions of people in line with the UN Sustainable Development Goals, that is SDG. So from your perspective, what role is ITFC playing in the area of deepening the non-interest finance market in Nigeria and Africa?
So ITFC does that in a number of ways. And the first way is that, as I mentioned a moment ago, they actually provide credit into member countries which are often shunned by the international banking community as being too high risk. So ITFC is stepping in and demonstrating that actually one can do business successfully, get repaid, move goods backwards and forwards into the global markets. The second thing which ITFC has done is they've created lines of credit for banks and organizations within member countries. So Nigeria is a member country, Ivory Coast is a member country, I believe Chad is a member country. So all of these member countries can benefit from facilities through ITFC that they otherwise can't get. Now, when we look at an organization like ITFC, COVID-19, we see a disproportionate amount of their funding is for fuel, for energy. And a lot of that is old energy. But if you start digging into ITFC's work, you'll notice that a lot of their more up-to-date work is the slow expansion of alternative energy and sustainable energy products into member countries. So I think you'll look at ITFC and the Islamic Development Bank Group post-COVID, with the start of this crisis. They actually took a very interesting perspective. Exactly. They said, we're not going to step back from member countries. We're going to
The
increase our
OIC member
facilities.
countries.
Exactly. We're going to increase our facilities into the OIC member countries to make sure that jobs aren't lost. I think one of the discussions I had with a dear friend of mine in Lagos just a few weeks ago on Zoom as well was the very distinctive difference between Nigeria and, say, Kuwait. And it's very straightforward. Kuwait has a small population. It's well cared for. Most people living in Kuwait have a reasonable job and get paid on time and don't have to worry about their next meal. It's just not true for the majority of Nigerians. They live on $1 a day. They have to earn it today. And, you know, before COVID, there was malaria, there was Lassa fever, there was bad traffic, God knows what else. So those people still have to go out, and they're going to go out. And facilities like those provided by the Islamic Development Bank Group and ITFC are creating avenues that generate funding for imports and exports that support many of those jobs indirectly throughout the regional economy.
Very interesting insights you've given on the role ITFC and ISDB playing in the non-interest finance market in Nigeria and Africa. Now, with the plan of the Africa Continental Free Trade Agreement scheduled to take effect from January 2021, how can the Islamic Trade Finance framework help in boosting intra-trade African trade?
So I think when we look at, and I'm not going to be an expert in the new development for the regional trade framework, but I'm going to offer you an observation about what's happening in our world today and some of the challenges that you in West Africa and the wider African continent are going to face. The first one is there's no doubt that the United States and China are now involved in their Cold War. And this is going to have many implications around the world. But one of the most interesting and most important implications is going to be that parts of the supply chain are going to move. So Western companies are going to be moving their supply chain either closer to their customers or where there's lower cost labor. And that is going to create opportunities, whether it's in Nigeria or Ethiopia or any other African country that's part of this agreement, to step into the supply chain with different products and opportunities. One of the surprising discussion pieces about the supply chain for, say, the N95 mask has come up. You've probably heard of Melita, the German company that makes coffee filters. Well, they make their coffee filters out of a bamboo fiber, which you cannot grow easily in Germany, but you could grow easily many places in Africa. That fiber is very resistant towards taking in certain types of germs and viruses, etc. And so Melita has actually moved into the making of N95 masks. So you can imagine, maybe you can't attract Melita, but you can imagine developing your own facilities in the region and distributing regionally throughout the free trade groups. So I think I'm suggesting it's a good opportunity for Africa to start thinking more about self-reliance, more about developing facilities for local manufacture, local distribution of goods, medicines, and services. We've already seen some movement in that end in Kenya, which has taken the lead in certain developments of
Mr. Thomas, what can you say are the challenges and opportunities for integrating Islamic trade financing to support African businesses and SMEs?
So I think the first and most important problem is the one of perception. And oftentimes people in the market think that because we call it Islamic Trade Finance, that it's only for Muslims. And we saw a huge debate just when non-interest banking was introduced in a serious way in Nigeria, where many people were resisting because they felt that somehow it was an exclusionist opportunity. And yet the reality is that we're only saying it's Islamic finance because we asked that people look at financing in a different way according to our religion, which says that we shouldn't deal in interest and we shouldn't deal in certain goods, certain activities. Well, on the one hand, I think that many of our Christian brothers and sisters are also concerned about those things from a moral perspective. And even I would encourage them to look back in their own scripture and discover that they too were not supposed to be involved with interest. But that apart, if we just go back to that earlier discussion when we started out talking today about the standard letter of credit transaction, which is about documents, versus the LC Murabaha transaction done by Islamic banks. So the Islamic bank is going to buy from the supplier, take ownership, and sell onwards. On the standard import transaction, the bank is going to finance against documents. And because the bank is only financing against documents, the bank has no risk in the goods, has no particular incentive to make sure that the documents are valid. That'll be the customer's problem. And so we get a more genuine transaction. If we scale back and we look at that transaction I mentioned earlier with the British investor in Nigerian cocoa farmers, mixed religion. Some were Christian, some were Muslim. The warehouse operator, Nigerian Christian. The British investor, no known stated religion. We don't know what he believes. We don't. I doubt that he's Muslim, but he doesn't say that he's Christian or Jewish or anything else. So, but the transaction was highly efficient. Why did he like it? The bank shared risk in the goods up to a particular point. Why did the bank like it? Because with his help, they got the goods into the international market with fairly good efficiency. Why did the Christian warehouse operator in Nigeria like it? Because he actually got a piece of the value chain moved from Europe to Nigeria into his warehouse. So I think the Islamic trade finance tools create a value neutral, they don't prefer one religion to the other, opportunity to change how risk is moved and managed and create better value chain opportunities in your countries.
With the Nigeria Economic Sustainability Plan rolled out last month, how can Islamic finance be adopted to support the development of the economy and lifting millions of people from poverty?
So whenever you have a situation where you have a high proportion of your population that is unbanked, any new tool is going to help bring those people into the banking system. And you've had some very good work done by Athena and other organizations in Nigeria to understand where the unbanked are and how they're unbanked. Just a few days ago, I was involved in a program sponsored by Jazz Bank, Fight Back COVID-19. And in that program, we saw people with very practical mechanical solutions. I think the winner developed a ventilator to be produced in Nigeria, be financed now with support from Jazz Bank. But there were marketplaces, online marketplaces that can work on a 2G phone, that can allow a cooperative or a cooperative member to bring goods to market and find buyers and sellers. So I think what I would expect and what I would hope is that you're going to see this blending of finance and technology, obviously fintech, that's going to really help the lower and smaller businesses in the country, so the micro and the small business enterprises, access financing more effectively and faster than they ever have before. But what's interesting about fintech, just going back to that partners meeting for ITFC in December, a British guy came to me from Singapore and said, I'm doing X, Y, and Z with my fintech platform in Singapore, and I'm doing most of my business in Africa. So we started talking about what his platform does. His platform actually disintermediates the banks. So he buys directly the goods at the warehouse prior to shipment, takes ownership, and then he takes the responsibility of delivery and payment from the off-taker. And bringing that all the way back to this Fight Back COVID-19 competition, we saw several marketplace products that do similar things. They create the opportunity for a local player in Nigeria to buy through the platform goods directly from the supplier, so that effectively you have non-bank financing but it's also effectively offtake financing from the real user. So I think there's a lot of interesting things being done in Nigeria, in the fintech space, in the technology space, that are going to be helping the small and medium enterprises and help lift people out of poverty. But you know, none of our countries, not Japan, not China, not Korea, not the United States, not Great Britain, did anything without a fairly detailed industrial policy. And somebody made sure the road was built, the storage depots were present, even encouraged certain industries to be developed. And I'm not an expert at all on the new plan, but what I would suggest is that Nigeria needs to look at exactly those things, without respect to anybody's religion, without respect to anything more than the national economic development. Start to invest in the infrastructure, but also in areas where the country can have a competitive advantage, where the country can take care of itself. I think the last time I was in Nigeria, there was a very interesting story that rice production had increased substantially within the recent years.
Exactly.
And so there's a number of other areas like that that should be taken advantage of. Then there are things like, how do folks cook their meals? You know, so right now, deforestation driving is connected to charcoal production in many areas, both in Nigeria and across Africa. But imagine if you could start using agricultural waste for charcoal production with less deforestation, et cetera. So there's a lot of little things that can be done within the planning process to create a much stronger economy and frankly speaking, generate more employment.
I agree with you, Mr. Thomas. As you've mentioned, micro, small, and medium enterprises, financial technology, because Nigeria poverty rates stand at 40.1%, which is massive and requires robust investment in the economy to lifting millions out of poverty. But before I let you go, how can Islamic Trade Finance leverage digital platforms to promote trade and investment amongst OIC member states?
So OIC member states as a whole are really enjoying two big jumps. The first one is what I would say intra-OIC member trade. And you've certainly seen this in Nigeria with the presence of Turkish and Egyptian businesses, Malaysian businesses to a lesser degree. And this is happening across the OIC value chain. Moroccan banks moving across Africa. So we're seeing more and more OIC trade for two reasons. The first reason is it's just good business, period. And the second reason is the global financial sector is actually just not interested in non-investment grade countries. So that's creating this gap for the financial sector to step in. And what everybody's discovered is that through the amazing development of things like M-Pesa in Kenya, is that financial technology is actually potentially very highly empowering to create better opportunities for the participation of less well-off people into the commercial environment. So I think we have really high expectations for financial technology to expand growth. And we think that OIC member states are motivated to trade more on a south-to-south basis.
Mr. Abdulkader Thomas, thank you so much for your informative insight and also for agreeing to be part of this show and meet your tight schedule. Thank you.
Thank you very much. And I wish everybody in Nigeria a wonderful day, and please stay safe and stay healthy.
And you too. Thank you very much, sir.
Thank you so much.
And that brings us to the end of this week's episode on Islamic Finance Weekly. To watch more videos, read news stories, report and analysis on Islamic finance, log on to our website, www.WebTVNG.com. Also, you can engage us on our social media handles displaying on the screen. Till we come your way again next week, thank you for watching and bye for now.